Good morning, everybody. It is Friday, December 2nd. Dan here filling in for Lori and just watching here as non-farm payrolls are about to come in. We've got a clear little double bottom and a double top, and we'll see on the reaction which one is going to break. So we'll just sit here for one more moment, watch the initial reaction, and then we'll do a rundown of all major sectors as we prepare. And it looks like a clear bear reaction initially. A pretty notable bear reaction. A very notable bear reaction. So daily consolidation is underway. It's a bull break with no follow through, which has us watching for a potential rising wedge. We'll check back in on this in just a moment, but this is the daily chart. I had this up from the end of the day video from yesterday. And watching this. So clear bearish reaction and definitely very beat up in the short term here. We're going to be looking for lower highs to be the result of bounces. And this is a very notable reaction. How big a drop is that so far? Over 1%, 1.5%. So, the NASDAQ has a double top at resistance. It's now actually a triple top, and this is going to be a key level from here on out. And it's the same old story as it has been for the last couple of months. And that is that the NASDAQ is not participating and giving the bulls confidence. So we got this resistance back here from September. We topped out there. And then again, yesterday we broke this level, but just barely. I consider that a triple top. And so now it's a triple top into daily consolidation, which again, is just not making bulls that comfortable on this move looking for follow through. We need to see clear resistance breaks. So we are, obviously depends on how the rest of the trading day goes, but going to be heading into next week a bit more cautious. Obviously, Thursday was a very bullish, or Wednesday was a very bullish day in response to Powell, but no follow through at this point, and we're giving back over half of that Powell mini short squeeze reaction here. So we'll check back in just 15 minutes or so to see how this reaction is settling in. But again, it's a very notable bear reaction. And even if the bulls significantly buy the dip, we're going to see some pretty notable lower opens here. The dollar is bouncing. So now the dollar, we're watching for the potential of a falling wedge because we just broke a daily double bottom of support and we are not seeing much follow through. So I'm watching this downtrending support line. As far as resistance, we could be watching something like that. But the monthly time frame, as I mentioned in the video from the end of the day yesterday, we're bouncing off monthly EMA 12. So I'm watching for a monthly high or low on the dollar. It's just a question of where is that monthly high or low going to form. I have no confidence that it's forming right now because we're in a daily downtrend. But the daily trend changing to the bulls will be the first indication of a monthly high or low shaping up. So that's something I'm keeping an eye on over the next couple of weeks. On this current bounce, we will need to see a 4-hour trend change to the bulls. Anything under 107.20 is just a daily lower high. The daily EMA 12 has been a nice resistance guide, but the dollar is a potential daily falling wedge, just like the S&P 500 is a potential daily rising wedge that we just looked at. So that's something that we're going to be watching for the bears next week. They're going to have to prove follow through. But again, the setup is there, and this reaction now definitely has us more cautious and watching for the potential that weekly consolidation may be shaping up. And checking in here on my Fidelity screen just to see which tickers, or I should say which sectors are being hit the hardest. Again, this is a very, very notable drop. We're now almost down, approaching 2%. But we've got XLV, not very liquid. So we'll watch the low of yesterday first thing on XLV, gap down open on QQQ and SPY at the moment. And XLF also shaping up for the potential of a gap down. So one thing that I'm going to be watching for once we get the open is how many, or do we see all of our major sectors hitting lows of the day at the same time? As I've talked about many times, we know that's something that we want to be observing for. And we saw it once last week or earlier this week before Powell pumped the markets. And so now the question is, do we see that again? And we'll have to see during regular trading hours whether or not that is the case. But this is a vote of confidence for the bears. And so my setup now, aggressive bulls can be looking on the morning for bounces. Absolutely. I would want to have a support level that I'm playing off of, perhaps a low of pre-market, but I'm not going to be looking bullish personally, because for me, the most probable scenario is going to be an hourly lower high as the result of the next bounce. So I'm going to be patiently watching this morning or mid-afternoon for those hourly lower highs, knowing that they're the most likely scenario. And so we will look at a bunch of individual names here in just a moment, but those hourly lower highs will be on watch. The metals bearish reaction here as well. 4-hour little bull flag attempt failed. So watching for the possibility of daily consolidation to shape up. At the moment, gold is pretty much a daily inside bar. We're going to be watching the higher lows as what is most important to us. Silver, same deal. So temporarily topping out and watching for a daily higher low with a lot of space, anything over 2086. But responding bearish to non-farm payroll. We've got the miners testing the low of yesterday. First thing, GDXJ, that low was 36.21. If that level were to break, there's a gap to fill at 35.96. And again, just watching for consolidation. And what the bears need to prove on names that are strong. So we could say GDXJ has been strong, solid 3-day bull move. We have been in an hourly uptrend, and that hourly uptrend is potentially being lost. So the key thing for today for bears obviously have the initial reaction in their favor. And if they are going to prove follow through and start to gain confidence into next week, what a bear wants to see is a bottom set sometime this morning. Obviously, bears would prefer free fall all day, but let's just assume the more likely scenario that we eventually find a bottom, bounce to an hourly lower high, and then by the end of the day, if we confirm an hourly downtrend, that's going to be a big win for the bears. And the same thing in the broader market. So here's SPY. SPY has a temporary bottom to this reaction. We're going to be looking for anything under 408.47 to be an hourly lower high. So let's just say we were to open right now. That means we can bounce 1.5% and still be looking for an hourly lower high. And the bears want to see the hourly lower high and lower low. Because again, the way that I view this reaction to data or a reaction to news, it's like a punch, it's sucker punch. The bulls were holding on just fine. They were confident on Wednesday. Thursday was sideways, no big deal, not much happened. And so now the bulls got sucker punched by this non-farm payroll reaction. And so now that we have seen the bulls get sucker punched, they're prepared for it, right? They're stunned a little bit, but now they're ready to fight. And so the question is, do they fight significantly and recover a good bit, or do they make an attempt to that the bears continue to overpower? So whether or not we respond to this initial dump with a lower low is going to be key for me, because again, that will just be bears proving follow through after the initial knee-jerk reaction. Oil. So I'm watching for oil daily consolidation, and I've been trading the energy sector, XLE, bearish pretty actively the last couple of days, just getting familiar with it and getting familiar with watching it and oil at the same time as I'm trading the sector and enjoying it because it's new and I'm liking it. So I'm watching oil for a 4-hour lower high, which is potentially shaping up here. And if oil were to break 80.38, I'm on the January futures contract here, CLF 2023. It would be a 4-hour head and shoulders. So I'm watching for a 4-hour head and shoulders, but we have to break 80.38 for that 4-hour downtrend to confirm into daily consolidation. And then we will look for a daily higher low. But again, I'm just recognizing that the energy sector has been weaker than oil the last couple days. And I'm recognizing it's a very tight range. And I'm recognizing that if oil were to see daily consolidation, that could potentially be a trigger to help the energy bears confirm a downtrend and break this sideways range bearish. So the low of yesterday, 90.54 on XLE, we're potentially seeing a small gap down open. And the next key level for me, the most important level, if I'm going to be a confident bear, I need to see a break of 89.05. If 89.05 breaks, to me, that's a downtrend confirming for the first time. When's the last time XLE saw a daily lower high and lower low? Hasn't happened since we bottomed back in September. So that's over 2 months now. And we're going to be looking for the first time we confirm a daily downtrend in over 2 months. And that will tell us things are shifting. So that's something I'm watching for closely over the next handful of days. And I have been enjoying the bit of relative weakness that XLE has been seeing even in the last couple of days while the market has been strong. Natural gas continues to show weakness. Again, we got our first red flag. I keep highlighting it just because it's just a small detail. And it's not a small enough detail to say bail, but it's a small enough detail to say, uh-oh, that's a red flag. Maybe I adjust my stop loss and make it closer. Maybe I go aggressively as a bear. And where is it? Where was that red flag? It was after we found right here. So we had a double top. And again, this is regardless of whether or not you care about natural gas. This goes for all charts. If you see a double top that is crystal clear, and everybody's watching that resistance level, and you break it straight into a break of support, instant red flag. And so we did that, and it wasn't an all-out dump. It wasn't a huge win for the bears, but from that point, everything shifted. And that was essentially an indication that this daily higher low attempt off EMA 12 is not strong. And here we are now rolling over into the potential start of weekly consolidation. The 4-hour RSI is approaching oversold conditions. From that point forward, the bears have been confident. This is a 4-hour downtrend resistance line to be keeping an eye on. You can see we've rejected from it 5 different times. So certainly valid. So we will be watching for a weekly higher low in natural gas, but certainly things shifted from that point forward. And we're also watching that on CCJ. CCJ uranium play. So CCJ has a tightening daily equilibrium that broke bull and gave us red flags yesterday. The red flags yesterday were the extreme weakness and close at low of the day when we didn't see any of that in the broader market. It was clear relative weakness comparative to the broader market. And so now here pre-market with the broader market weakness, we're likely to see a gap down. And we're going to be looking at daily support of 2294. And again, it's something that for me, it took many years into my trading journey to look in the opposing direction when something happens on a chart. I used to, look at that break on natural gas or look at this break on CCJ and be able to recognize, that that's a red flag for bulls. But something that I got better at as I advanced in my trading career was then looking in the other direction and taking that as a signal for the other direction. So something to just be aware of. If you see, a key setup that should break with follow through and it lasts one candle and then goes in the opposite direction, that for me is the definition of a lack of follow through. A break of one candle straight into consolidation. And that's what we're seeing in the S&P 500 right now. It was a bull break of the double top by one candle straight into consolidation. That is a bull break with a lack of follow through. So that for me is my definition. I often get that question, how do you define a lack of follow through? Whatever time frame you're on, one candle straight into the opposing direction is no follow through. If this were going to be follow through, we would see multiple candles going in that direction. Bitcoin. So cryptocurrency looks like we just saw a 4-hour lower high and lower low. So daily consolidation is now underway, and it too, daily uptrend confirmed, one green candle straight into consolidation. The most likely scenario for cryptocurrency is weekly lower highs on the vast majority of individual names. And for Bitcoin, anything under 21.5 thousand is a weekly lower high. And so that's a long ways away. So if we see signs that our daily uptrend is being lost, which we don't have right now because anything above 16,000 is a daily high or low, but we're keeping an eye out for signs of a loss of a daily uptrend. I'm going to be watching for a head and shoulders or a rising wedge or some kind of bearish pattern, but we know the most likely scenario is a weekly lower high. So we then zoom into the daily chart and we look for indications that weekly lower high is potentially shaping up. And we can see the crypto space here There's actually a decent number of names holding on fairly well. You can see the stronger names, that hourly candle, not nearly as daunting as what we're seeing on the S&P 500. But Bitcoin did react and did break support. We will see about follow through. Checking back in on the S&P 500 reaction, still an extremely weak bounce. For such a big dump, we don't even have a 5-minute bounce underway at this point. Bearish reaction. So let's look at individual names now and where we stand. Amazon has really been struggling, and it has been consistently a lead bear. And if we do Amazon divided by QQQ on our charts, we can see that relative weakness. This is showing us that Amazon has been weaker than the NASDAQ pretty much for a month straight at this point, almost 5 weeks now. And as long as this is in a downtrend, just treat it like a trend. As long as this is in a downtrend, Amazon will be weaker than QQQ. And we know QQQ has been weaker than SPY. So Amazon has been one of the more bearish names out there, out of our major names that influence SPY and QQQ, these ETFs, due to the size of the holdings that they have of Amazon. So Amazon is a tightening daily range. And again, it too just confirmed the first daily higher low and higher high that we've seen in over a month. But that is now going straight into consolidation, and it is keeping the bears confident. 91.44 is a key support. If 91.44 breaks, these little higher lows break, and we're going to be looking back towards the fear low. And we cannot have confidence in a broader market bottom for the NASDAQ as long as its major players are showing weakness, and Amazon is definitely a major player. Apple, significant bounce the last couple of days. Hourly is leading to a gap down open. So daily lower high is being set now on Apple, 149.13, and the burden is on the bulls to confirm a daily uptrend. It's still possible. This is going to be something key to be watching into next week, because the weekly time frame for Apple is a nice equilibrium with our low, lower high, double bottom, lower high. We're trying for a higher low on the weekly to continue forming this tightening range, but we're not going to form a higher low on the weekly until the bulls confirm a daily uptrend back in their favor. So the bulls must hold 140.35 and break 149.13 next week to confirm a daily uptrend. If I'm a bear, as long as Apple does not confirm a daily uptrend, that remains favorable because these are lower highs fairly consistently. So again, Apple is an extremely important name in QQQ and SPY. And so this is something to be watching closely to next week for potential clues. Microsoft, and again, these are the three most important names: Microsoft, Amazon, and Apple, for their weight in the NASDAQ and big tech sectors. And so Microsoft is stronger than Amazon and Apple. It broke to the highest level that it's seen in months with this resistant zone bull break. But daily consolidation is underway. A lot of space for a higher low, anything above 238.21. But when we're analyzing these three names, we're looking at it and saying, okay, Microsoft is clearly the captain of Team Bull for QQQ, NASDAQ-related names. Amazon is the clear lead bear. It's captain of Team Bear for the NASDAQ. And so I'm watching for shifts. Does Microsoft join Team Bear and start showing us weakness? Does Amazon join Team Bull and start showing us strength? That's why I'm always watching these correlations and whether or not we have relative weakness or strength, because recognizing one of these major individuals shifting can give us some potential clues or can shape our probabilities on the broader market as a whole. So these three individual names are some of the more important individual names that I track on a daily basis. And again, just watching them bigger picture for market insight. Other names, I'm used to talking for an hour and a half with my morning live stream here, so I'm going to speed it up a little bit. So Meta had a significant 2-day move here. And again, we can be watching for hourly oversold bounces on some of our stronger names. We know Netflix has had a really huge couple of days here. But again, look at this resistance here. We've got bull breaks lacking follow through. Is this a rising wedge? Sure looks like one is potentially shaping up here. Again, this could take, a week plus to resolve. We could pull back for a few days and then bounce, but absolutely tracking this Netflix potential rising wedge. on the daily as we hit monthly EMA 12 resistance. Pre-market, we've got a pullback here. We're not gapping down. Any name not gapping down is showing us relative strength, obviously, as we see so many names are gapping down. But just keeping an eye out for if we lose the hourly uptrend on Netflix, the probabilities of this rising wedge will increase for me. So this is not something that, I act on now. This is a setup that I know I'm watching this next week for a potential swing trade idea. And I have to see things continue to affirm to me that this is taking place. And that means I need daily consolidation to take place from this 320 top here. So what would daily consolidation look like? It would look like the next time we bounce, confirming an hourly lower high and lower low. Other sectors, XLF is a potential rising wedge here. So XLF is gapping down, but what XLF has been showing us the last couple of weeks, bull break again, one candle here, one little green day, straight into a daily pullback, and now I guess you could call that two little candles, but pretty much a bull break with no follow through, straight into a pullback. This is showing me bulls are getting tired. And so with this gap down open, now trading at 35.71, it's all about 35.14. And again, we look at the character of this chart and we say the bulls have had a clear daily uptrend on XLF for 6 weeks. The first time that daily uptrend is lost, the first time daily EMA 12 is lost, it tells us things are shifting. We have a weekly stair-step pattern that broke earlier this week. And again, it's just a lack of follow-through. So I'm watching, and this is part of the energy sector. XLF and XLE have correlations a good bit of the time the last couple of years, at least that I've been paying attention. And so I'm watching for the potential that XLF rolling over can help XLE weakness as well. But watching our major sectors, XLF, XLV, QQQ, and IWM, and XLF is definitely giving some red flags to the bulls. Aggressive bears are watching for weekly consolidation. And we got IWM with a double top now as well. Gap down open, I assume. Yep, so double top into daily consolidation. Just like the NASDAQ now has a little double or triple top. So this reaction here is making me a lot more cautious as a bull in this market. And again, just hyper focused on the dollar, trying to shape up a monthly higher low. And whether or not that's going to align with gold, silver, S&P 500, monthly lower highs. Again, still a long way to go. Every day is going to give us more information, and we got a lot more proving to be done. But I just know that that's something I'm watching for in the coming weeks. Cannabis names. So cannabis names had a pump yesterday, but obviously that pump is being deflated significantly here. Still an hourly uptrend on TLRY. So 392 is a support level here. CGC, still looking for an hourly higher low. So these names have relative strength and are still in hourly uptrends. So I personally would much prefer looking for a name. If I am going to be looking to buy a bounce play this morning, I want a name that's still in an hourly uptrend, where an hourly higher low is the more likely scenario. MSOS, US Cannabis had a big run at the end of the day yesterday. And again, an hourly higher low, anything above 1177. So keeping an eye out for hourly higher lows on the stronger names, and then keeping an eye out later in the day for hourly lower highs on the weaker names once a bounce does get going. Checking back in on the market's bounce attempt here. A little bit of follow through, just looking for a 5-minute lower high. And we're heading into the open. Well, we still got 35 minutes, but we're going to be watching for a 5-minute lower high. And the question will be, can bulls confirm a 5-minute uptrend as a result of this reaction? If they do, I will zoom out and I'll scout a 15-minute lower high to then be the result of the bounce. And if we then confirm a 15-minute uptrend, I zoom out and I scout an hourly lower high to be the result of that bounce. So that's the way that I'm approaching the morning. It's what I call the zoom out game. I talk about it a lot in the cryptocurrency videos. But it's just one time frame at a time. Can the bulls prove a 5-minute uptrend? If they do, we zoom out a bit. And we are finally seeing a little bit of bounce follow through. Up now 0.5% off that low. But bulls have a lot of work to do to recover from that reaction. And again, best case for the bears is an hourly lower high and lower low. And the low of this reaction in pre-market now is key. Once the bell rings, any individual names breaking their low of pre-market will stand out to us as weaker than names that are not breaking their low of pre-market. Semiconductors, I assume, are weak as well. NVDA is right at the low of yesterday. So we're going to test 166.35 first thing. If it breaks, again, it's another one that broke resistance straight into a daily pullback, which anytime I see that happen, a break of a resistance or support with no follow through, I start keeping an eye out for a wedge to be watching for the trend and the direction that we've been trading in to tire and to potentially reverse. So we still got plenty of space for the daily uptrend to remain intact, clear higher lows, anything above 155.16, but daily consolidation is on the verge of taking place right after our bull break earlier this week. Tesla. So Tesla 201, I round on Tesla because 18 cents doesn't mean anything. You know, if we were to break to 295 and then pull back, it's a double top. So just rounding it to 201, anything under 201 fails resistance. Pre-market, we're testing the low of yesterday first thing. So if that low of 191.80 breaks, daily consolidation will then be underway, and the hope for the bulls would be an inverse head and shoulders to try and get a more significant bounce underway. And that's something I'll be watching for. Essentially, heading into next week, I want to have names that I'm watching both directions. So I already have my bear thesis. I'm watching the energy sector bearish. I'm watching the financial sector bearish. I'm watching the S&P 500 for a potential daily rising wedge. But what if I'm wrong? I don't want to be caught completely off sides and not have any kind of game plan for the other direction. So if the broader market bulls were able to keep a daily uptrend and recover from this and head to a higher high, next Tuesday, then I would be watching something like Tesla to be setting up that inverse head and shoulders to try and act as a laggard on this move, considering we've been so much weaker than most names over the last couple months. So that's a setup that I can, see this is a potential inverse head and shoulders, depending on how the next few trading days go. But again, I always want to have something for both directions that I'm keeping an eye out for to just be prepared. All right, I've been ignoring you all in the YouTube chat. Apologies, I'm not able to easily read and do technical analysis at the same time, but I appreciate you all tuning in here. We've got 3 minutes until Lamont goes live for Chart Guys members, getting ready for the open. So we're watching for these 5-minute lower highs to be the result of this bounce. And again, can the bulls confirm a 5-minute uptrend? If the answer is no, then that's going to show very significant weakness. And if the answer is yes, then we'll zoom out and look for a 15-minute lower high to be the result of the bounce from there. So again, the cannabis names are the only names that I saw from my quick rundown that have the potential for hourly higher lows. There are some potential bottom fishing plays. Again, any name that is holding its low of yesterday, an aggressive bull is going to be looking to potentially play off of that support level. Netflix is not close to its low of yesterday. That's still 2% lower. So Netflix has a higher probability of holding that support level. So again, those are the names that have a support level to be playing off of for aggressive bulls to be looking at. But personally, I am not interested in being an aggressive bull. I would rather be patiently waiting for the lower highs, whether it's a 15-minute or an hourly lower high. I know that that is the more likely reaction to these bounces. All right. I appreciate you all tuning in. Have a great Friday. Make sure and do good things out there. And Lori will be back to normal next week. I hope you're well.